Good morning, Quasar Markets Live. Buff, how are you, man?
Doing real well. Yourself?
I'm looking good. The markets seem to be coming out of the doldrums of the war here, and right back up we go. So I'm going to get out of your hair. Before we do that, I will show the. You've got some things here to show, and then we will add you to the stage. Okay, remove and add to stage. There we go. All right, Buff. I'll see you later, my man.
All right, Big Beat. Well, you mentioned the war, and it's always a war within the markets between the bulls and the bears. And so today we'll start by reviewing last week's data and its potential implications on the larger war. And then we're going to finish by previewing a few predominant sectors and then some stocks scheduled to report earnings this week. So we'll get a preview of that. Now, looking at the chart here, really the week started on Wednesday. Wednesday delivered a decisive victory here for the bulls. 95% of the volume last Wednesday was to the upside. And we've been talking about this clustering of downside volume days. And now for a first time in maybe 3 weeks or so, we finally get a nice capital weighted upside day, which is needed. But again, like some of the other ones that have happened in the past, it's just on average volume. So the bulls got a good jump here on Wednesday, but they didn't follow through. Matter of fact, Thursday, you can see here, the downside volume was quite large, represented about 85% of the volume's day, and it was above average. And that was followed through on Friday, again, above average volume, and with the vast majority of it being to the downside. Matter of fact, 75% of the volume on Friday was to the downside. And that kind of that sequence kind of captured the tone of the week. Advances met by swift supply. Now let's shift gears here and let's now look at the weekly chart. Okay, I'm going to tune this in so you can see a little bit better. Okay, so last week we could see here that the S&P lost a little bit of ground on above average volume. Upside volume was a little bit above average though. That's good. We haven't seen that for a month or so. And again, the downside was also above average. And this for the week, roughly 51% of the capital weighted volume and the capital flows tilted to the downside. So in sum, you could kind of look at last week as the market's kind of forming a form of equilibrium. Okay, it was had some more elevated activity. Buyers showed up, the sellers showed up, but neither really fully conceded their grounds. And so let's take a look here at our troop movements. And you can see here that, again, it was the belly of the market that has been showing strength. So if we look at the NASDAQ, the QQQs, they were down 0.25 in the green line. The Russell, going down all the way down the pyramid to the smallest stocks, the Russell 2000 was down 121. So both of these units were down. And then the S&P was down 0.5%. In contrast, the belly of the market was where the strength was. So this is the S&P equal weight, the orange line, and then the brass commanders. These are these quality dividend stocks represented by the Schwab U.S. Dividend Index, up 0.51%. So let's kind of narrow this down into those individual units, and we'll start here with the generals, the Qs. And last week we closed on a doji. Doji generally means it's maybe a time for change. And so we've been heading down. So on the intermediate term, so maybe it's a time to catch back up, and it needs to. The Qs really need this, need an opportunity, because they're right here on this critical support line, right around 600, but it's holding. So we need to watch 600 on the Qs. That's going to be the important piece. Okay. Now let's switch from the generals to the troops. Okay. The troops have been acting a lot better than the generals as of late. That wasn't the case in 25, but it's been the case late in 25 and so far early 26. And the Qs have been consolidating. Or excuse me, the troops have been consolidating ever since this Dragonfly Doji here on the 22nd of January. Since this Dragonfly Doji, the troops have been flattening out. And last week we ended, they said they're on a pause, and they're still out on break right now. So we can see here that last week they ended up down, but still very much within this bigger candle here of the range. Now let's move on to some of the other units here that look more positive, the belly. Okay, so as opposed to looking at the S&P, we're going to look at the S&P equal weight. And you can see here higher, low, higher, low, higher, low, higher, low. So we're meeting the definition of an uptrend is higher highs and higher lows. And that's what the RSP, the S&P equal weight, has been doing for us. And the standout, the dividend stocks, which have missed the last year and a half of rally, have suddenly caught life. And so we can see here that we have a very beautiful base that is formed, and then breaking out here, and we continue to make higher highs. This last week, the price action was completely engulfed by the previous week, and so we're still on standby here with the dividend commanders here. Now let's take a look here at what's happening with capital flows. So this here is the is dollar volume, my proprietary capital weighted dollar volume. And what we talked about was that, for the last 2 weeks, is that the importance of the support line. And last week, 2 weeks ago, I should say, we hit support, we slightly curled up. But this past week, we gave it all up. And so right now we're right on support. It kind of depends. If you draw a thin line, you could actually say we broke it. But I like to use thick lines because we want to support and resistance can be somewhat it can have some variation, and so we want to give it some leeway when looking at support and resistance. And right now we are right at that critical support right here. The bigger picture, though, is that trend. You can see there this orange line is continuing to move up, and we're above the trend. So on the intermediate term, we still look okay, but it's something to watch, because if we break trend here, then all bets are off. Okay, now let's compare that here to that's dollar volume, and let's just take a look at just volume now. Looks very similar. Again, we have this important support level. We're again thick line. We're still holding support, but again we lost that upward curl, and we're right on that support line. So this week is a critical week for holding major support. So let's take these down and move back into our bigger themes here. So last week we discussed the importance of these capital weighted volume and dollar volume trends reaching critical support, and so they're holding ground near term, maintaining that bullish posture. Okay, now these are weak, but there's an area here of the market that has been our standout. This is where the bulls have been are laying their hopes. Okay, and let me show you what that looks like. That is the advanced decline line. And so now you can see here that now it's been over a month that the advanced decline has made new higher highs and higher lows. So you can see that the advanced decline line broke out and continues to advance despite the weakness of the, or at least the pause in the S&P and the weakness in capital flows. And so again, what we can characterize this market as this breadth is the defining feature of the advance. Okay, and so the expansion of this participation underscore that, again, this theme that capital is moving away from this narrow top of generals of these Mag 7 and is broadening out to the rest of the market. And so that's what this advanced decline line is showing us here, is that capital is rotating rather than exiting. Okay, so the ranks continue to widen even as some of the headline, the big stocks continue to consolidate. So with that, let's take a look at some of the important sectors. And of course, with this weekend's events, we have to take a look at crude. Okay, and crude, you can see that it's built a very nice base. This is New York Brent. Okay, and then it broke out. Okay, this is on the short term. This is a very positive chart. Now, this looks more like a channel than a typical saucer base, but it does kind of look like we're forming a handle here from the breakout. And if we were to look at it on a intermediate term picture, you can see that we have resistance. Let's see what that is. Right around 77 is where the resistance is on Brent. And then we could take a look here. Another one to watch here is silver. Okay, and we'll work back into the intermediate term. Okay, on the short term though, let me look here. Let's see here. We're gonna look at it this way. Okay, on the short term, on the dailies, you can see here that the money flow is stronger than the price momentum, which is a good sign on the shorter term. But switching it to the intermediate, the price momentum is stronger than the money flow, which is in a good condition. So short term, it looks like we could get some movement. It's not happening today, but looks like it could get some momentum. But on the intermediate term, it still looks to be in this big consolidation. Okay, so we're going to be bounded by this big candle here, and I expect it will be trapped in there for some time by that movement. And then another area that people are looking at, and this has been an area of weakness, and it's been an area that I've advised clients to avoid. But now it's starting to put in a bottom. See, we got here right down to support. This is IGV, the software index. It came right down here to support. It wasn't looking good at all. All these metrics that I look at were looking terrible, and now they're starting to improve. Okay, so now we're starting to see the capital flows weakening on the decline and expanding on the advance. Okay, so this is starting to finally show some positive signs of life, both on the weekly basis and also here on the daily basis. Both of these, the red line is well ahead of the blue line, which is a positive development. And I said we're going to end by looking at some stocks with some prominent stocks that are reporting earnings this week. So one of the major leaders is Broadcom, and Broadcom. It's right at a critical support line right here. So it needs to hold this area right around, let's just say right around 310. Maybe get as low here as 295. Those are the areas that it needs to hold. To me, when I look at the volume situation, it's got more upward price momentum, even though it's been coming down. We're seeing more price momentum than there is volume momentum. So this doesn't look too attractive to me going into the earnings report. Next, we'll look at Marvel. on the same basis. And Marvel's pretty much even. Marvel Technology is pretty much right in line. You can see that it's consolidated down here. It's at an important support level that it needs to hold. But I'm not getting a lot of indications on what might happen with Marvel based on the volume. And then Target here on the weekly looks really strong. Look at that, all that money flowing into Target as it rallies higher, and the money flowing in is stronger than the price momentum. So this looks really good on the weekly. But going into the report on the dailies, we don't get that same conviction. Okay, it's okay, but it's not that strong. And then his sister Costco. Again, here's another one that is pretty much, not a lot of indication here. If anything, it leans a little bit bearish on the volume side on the dailies, and also the weeklies. So it also happens to be running into resistance. So that's not a great combination. Moving to Kroger. Oh, it's not Kroger. Again, this is another one that's more neutral than bullish or bearish. Let's look. I did find one that looked fairly bullish, and that was BJ. So BJ, again, look at the very strong money flowing into the stock, and well ahead of the price momentum. So this looks, going into on the intermediate term, BJ looks strong, despite it's already being up a bit. Now on the dailies though, it doesn't look quite as strong. So there's definitely some divergence here between what's happening on the weekly and the dailies. It doesn't quite look as good on the dailies, but the intermediate looks pretty strong. And finally, we'll end with Macy's. Macy's, oh boy, that doesn't look too good. And but going into earnings right now, this is holding support. The price isn't. So you might get a little bit of bounce out of here out of Macy's. We'll see what happens, because the volume isn't confirming this strong of a down move. So let's wrap it up here. This environment is being defined by divergence. We got the generals and the troops. Now they're giving up some small pieces, some small patches of ground, but yet the belly, that formation continues to advance. So these conditions outlined for a market that I've been defining for a couple of years now. That was the theme and then there were one, meaning that the former leaders are yielding their dominance to and being redistributed across the rest of the ranks. So overall, the market isn't breaking down, but nor is it breaking out. Supply is probing the support levels while our breadth is expanding. So investors should remain in line with this broadening theme and exercise discretion around these key support levels. Specifically, respect 600s in the QQQs, the generals, and 255 in the IWM, the troops, as key support. Watch the behavior, the volume, particularly as we hit these support levels. And should downside volume expand meaningfully and we break, a defensive posture may be warranted. But on the contrast, should these support lines hold and we bounce and we see that follow through with volume, that shows that the campaign is the bulls are reviving in life. So overall, remember that campaigns like this that are marked by divergence, survival depends not on speed, but on your discipline. So with that big beat, you got anything else? I'm not hearing you.
I think discipline's a very big important part of that, Buff. You know, as you
Mm-hmm.
say, you talk about the markets and looking at charts, but sometimes, you know, when you start to see things like the news, right, with the war and stuff, that discipline is what pays off and not just emotion. So I like that. All right, Buff. Well, I appreciate that. Yeah, I appreciate that, and we'll see you right back here next week, my man.
All right. You take care. Thank you.